Over that time, India has accumulated ungodly amounts of silver as well. All right, so this is an update tying those behaviors together in what can only be described as an emerging cartel.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and today's market rundown, we will discuss. There's always a lot to talk about right lately. Well, I guess that's the price you pay for having a good market finally. Okay, today I want to revisit something that came out of the BRICS Summit, which is not over, and people will be focusing on that, on de-dollarization and the unit and potential for currency, which is probably going to be coming out with more news today, or at least more comments today. We'll see where they are in their progress. But I want to focus on something that I saw yesterday coming out of Putin about grains of all things. And it brings me back to something discussed here over the last 2 years in my own personal journey of saying silver will never be money again to saying silver will be money again. And I'm going to take you through that without too many details. But let's just start with this. The discussion today will be on our silver cartel thesis updated. And in premium, we have a gold comment by Arcadia Research and Goldman Sachs on bond yields and the potential effect on stocks and gold. Those are little blurbs, but I think they're significant, especially with what's going on in the markets. All right, let's start with the markets themselves first. I'll let you look at some charts there. The dollar is down 21. 10-year yields are 4.19 and down 0.05. Wow, very good. S&P 500 is 58.29, up 26. VIX is 18.69, down 56. Gold is 27.39. $24 on the highs of the evening and about $9 shy of approaching of negating yesterday's sell-off. Silver is 34.10, up 41 cents, up 1.25%. Copper is 4.34, up almost 3 cents. Gold silver is bouncing down a little bit. WTI 71.94.93, up 7 cents. Natural gas 2.46, strengthening, up 3 cents. Bitcoin 67 spot 240, up 6.36. Ethereum up 3. Platinum, palladium is 11.40. Putin says thank you for the sanction idea, up 28. I'm sorry, 78. Let's put that up. Oh my goodness. Sorry, Silver, you're just not cutting it today in terms of what's fancy. Yeah. Dear United States of America, thank you, Vladimir Putin. Platinum up in sympathy, but not nearly as much, up 1.5%. And grains are mixed, wheat down, soy and corn up. And we're actually going to talk about grains today with regards to silver, if you can believe that. All right. The markets themselves. This, just if you're not looking at it from a metals point of view, this is risk on, right? This is dollar weaker, yields weaker or lower, I should say. Stocks up, gold up, silver up, copper up, oil up, barely, but it's up, Bitcoin up. In this case, Bitcoin is acting like a tech stock. And platinum, palladium just don't even look about what they're doing there. If you were to look at this and say risk on, that you'd be right. If you also were to look at this and say this is keyed on, now we're focusing from the metals point of view, dollar correlations, the dollar and the bond are driving this right now. When the dollar got strong yesterday, gold got weaker. So that correlation is reasserting itself. And that's because U.S. investors are in the market. If U.S. investors are in the market, even though they're starting to figure out that the BRICS want the gold, they're going to still fall back on old habits. The dollar's stronger, sell gold. The dollar's weaker, buy gold. And you're going to see that more. And as a result of that, their brokers, their bankers, the traders are going to react that way as well. There's a Pavlovian, I don't know, daisy chain going on right now. So the market, the correlations are snapping back. And so if the dollar's stronger like it was yesterday, up 46, I think, gold's down 33. The dollar's down 21 and gold is up 23. And similarly, bond yields are starting to things are getting very volatile right now. Okay. So if you're looking for a trend to reassert itself, that's great. And it may happen. But I'm of the opinion that we're in the teeth of the thing right now, where we've approached the event horizon, and in the event horizon, outside the black hole, uh, you don't know what's going on outside, and so events happen outside of you that you don't know about. So it's kind of like everything falls on deaf ears, and a lot of people are getting stupid right now. And try not to be stupid, and you'll be fine. All right. The silver cartel is a thing. Homepage, BRICS Pay Passport. That's how we characterize it. Where's the missing 882 ounces of gold, tons of gold, ounces to me, and the largest study ever on UBI. This is interesting because it harkens back, well, UBI, right? Don't work, get money. Is it inflationary? Is it not? We know it's inflationary. But what it also is this proves that it undermines incentive to work, as if you didn't know that already, but you need to see the statistics empirically because some people need to be convinced of that. And it's true. And that is a harken back to the 70s. We'll cover that another day. Discussion, the silver cartel thesis updated. Okay, background. In 2023, 2022 maybe, while studying the potential mix of the Enbridge basket, it was determined back then by us that gold was the only sure commodity to go in it. We weren't sure, but we were pretty sure. Silver was the only other commodity that remotely had a real chance of inclusion. During that time, we opined, this is where we went from silver will never be money again to, oh shit, silver's going to be money again, would have a real chance of inclusion. During that time, we opined that silver would be included in some fashion in the basket, or at least made more tethered to gold as a naturally occurring ratio. 7-to-1 if you're looking at mining, 15-to-1 if you're looking at naturally occurring. Since then, very recently, Russia has made it publicly silver will be a key asset accumulated by its government. Platinum and palladium and gemstones, who the hell knows for what, but silver. China, before that, we reported, has been identified as buying Latin American concentrate, silver concentrate, before it's refined. Before it is refined, which means before it can be spoken for on exchanges, which means before it's hedged, which means the West doesn't even know it exists. Okay, concentrate is going to be a big deal, and you're seeing them talk about it in copper. And if I send you a report where they're talking about concentrate in copper, you think silver. Okay, what's the third one here? Where's my notes? Over that time, India has accumulated ungodly amounts of silver as well. All right, so this is an update tying those behaviors together in what can only be described as an emerging cartel. This is something we did in July. We did it for founders, and then we gave a written version to premium. I've made this available for premium now. We didn't make it available for premium back then because the recording quality was really, really choppy. But you know what? The heck with it. It's too important, I think. And it goes into why we think the things we just said. But we're going to add to that right now for you to give you a little heads up. Now, why are we even talking about this? Where is that? Here it is. Sorry. Yesterday, Michael Every of Rabobank did his market report on geopolitical happenings. And he had a section devoted to the BRICS Summit. And we titled that, "The BRICS Summit Hints at Commodity Cartel Aspirations." We quote him, "We might see progress towards Russia's plans for a BRICS exchange for producers and consumers of almost half of global grains." Hi, Angie. Or a bread peck or bread OPEC. While pricing these commodities will surely remain in dollars, don't be too sure of that, but okay. Mechanisms may be proposed for price floors and ceilings. Moreover, we may also see increased institutional BRICS barter to obviate the need to transact grains traded in dollars. Okay, grains trade in dollars. There's a lot of things he says there that I disagree with, but we're not going to get into those right now. What we're going to get into is we're going to take bread and we're going to show you that it's silver. All right. Then he goes on. Moreover, this grains exchange works, which is far from certain. He's right. It's probably not going to work. Expect attempts to roll it out to other commodities. Edit, like silver. The BRICS are rich in. Even so, those thinking we will get to the same outcome in energy anytime soon are failing to do serious analysis of their own. Bingo. If not, those looking at U.S. bond yields really are. All right, so working backwards a little bit here. They're not going to be able to do this in energy. Okay, that's what he's asserting, and I agree. They are going to be able to do this in commodities that they have large economic footprint in. Putin was giddy with this concept. It was introduced December of last year, and most people said no. It's not going to happen. It's too complicated. It's too hard to do. But Putin loved it, and in March of this year, it came back. Russia is interested in this because look, China's got their gold exchange. Russia wants to have an economic exchange, and it's not just a zip code. It's not just a zip code. It's an economic power. And Russia is a massive grain producer. Wheat's their thing. So why does this matter in general for the BRICS? And why does this matter specifically for silver? All right. One key to dismantling U.S. dominance, as discussed here several times, many times, and with Tom Luongo on more than one occasion, is the globally recognized price disseminated by Western-controlled exchanges. We talked about this yesterday, actually. Eventually, true economic power will demand that trade be done in currencies most efficient to buy-side players. Hey, we're buying all the grain. Why don't you use our currency? Competing BRIC exchanges are a tool that will erode dollar pricing power over commodities traded proportionate to their true economic power. So once you list a commodity on an exchange and you're the buyer of it and people see it on the exchange and they see the exchanges in your area, eventually the pricing power moves to you. Pricing power follows real trade power. China, Russia, and Dubai continue to make inroads in this aspect. Multipolarity is inevitable. Okay. Now, there are three ways, I'm sure there's more than three, but there's three ways that I've identified to take control of a commodity in cartel-like fashion. The first way is to deplete above ground stocks in a commodity that are being held by the enemy. So you take all the gold from our exchange and you put it on your exchange. And you see that more easily in copper, but it's happening in gold and silver as well. The second way is, and so they're all doing that, right? They're all buying commodities. The second way China is doing, you buy assets, resources in raw form before they're processed and put on exchanges. So you deplete their funnel of new raw materials being processed. And the third way is you create an exchange that allows you to project your own price out there. And so when you go to CNBC one day, it's got gold in yuan. Anyway, take all those three together and you're creating a cooperative, a cartel, if you will. And if Putin wants to do that in grains, they all want to do that in silver. It's happening. Sounds like Ron Paul, but you get the point. The point is, if the BRICS wish to weaken dollar dominance in order to let their own economies flourish financially. Let their own currencies reach their real level. Let their own trade status be treated more equally among partners. Respect, economic respect. You need to take away one of the most important legs in dollar dominance, and that is commodity pricing. And in order to do that, you can buy the commodities from them, you can buy the commodities in raw form, or you can create an exchange that eventually changes the commodity to your local currency. All three of these things are happening. They're not going to happen overnight. Putin desperately wants grains, and he's not going to get them the way he wants to. And if he does, it could be a disaster. Floors and caps are bad, but grain people will tell you that more than I can. But it's going to happen in silver. It makes sense. If you're willing to do it in a piece of food that can go bad, you're going to do it in silver. And that's it. I mean, the silver producing, exporting countries is a thing. It's going to happen, and it's not going to happen tomorrow, but it's going to happen. All right, that's my thesis. All right, news and analysis. El Orion, the West should be paying more attention to gold. I think this is important, even though you may roll your eyes and say, we knew that, we knew that, we know. No, but see, he's the announcer to the normies, okay? So that makes them wake up. All right, largest study ever on UBI was conducted. I mentioned that. The global cloud of the new BRICS. This is basically a graphic. Let's see what comes out of that today. All right, data on deck today. 8:30 a.m. 8:30 a.m. is new home sales. Home sales are going to weaker, and at the bottom we have the premium. All right, so palladium is just crazy. All right, starting with gold. All right, so see this here? I'm not going to declare victory. Well, I could declare victory. I said, this is a measured move. We'll go from here to here. We almost got there. We didn't get there, but luckily I wasn't a pig about it. Now we have this. Now, I want to say this is one of those measured moves. Yeah, but we got to get all the way up here now. So this could be turning into a flag. I did say yesterday I was a little worried. But I think the reason you should be worried now, if you're a short-term bull, like if you need it to go up tomorrow, is because American investors are involved. And American investors are completely fickle when it comes to the dollar and bonds and what have you. And as a result of that, you're going to be hostage to whatever bipolar moments they have. It's actually not bad, right? Bought it up. This could be a ratcheting down effect for silver. Anyway, forget those charts. All right, the election's going to come, the market's going to be very volatile, and then things are going to go back to the way they were afterwards. That's it. I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals with Vince Lanci. Brought to you today by Fortuna Mining, who just last week released their third quarter production numbers that came in at 110,820 gold equivalent ounces and leaves them on track to meet their production guidance range of 457,000 to 497,000 gold equivalent ounces on the year. Fortuna is now also 76% complete and on budget for their Lindero leach pad expansion project, which is on track to bring their costs down even further next year. And all while we are seeing the gold rally where we've seen record prices set throughout the year, and certainly Fortuna in position to benefit from that. And of note, Fortuna will be releasing their third quarter earnings on November 6th with a conference call at noon Eastern on November 7th. And we'll look forward to having Jorge Ganoza, CEO of Fortuna Mining, join us on the show on the 7th as well. So thanks to Fortuna. Congratulations on their success at Sequela over the past year. And thank you for tuning in at home. Sure appreciate you being here. And we will see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions. And thanks for watching.